An internet boom and easy access to smartphones has ensured that Indians are now consuming content on their phones like never before. Mobile is the backbone of online advertising, and mobile apps is where the bulk of action takes place for both the user as well as the advertiser. And with most locked in at home due to the coronavirus crisis, usage has surged. According to advertising tech platform InMobi, in the first quarter, mobile ads targeted at shoppers grew 28% year-on-year, while music and audio, health and fitness and education-related ads saw a whopping 500% growth in India, marking the immense growth potential that the space has to offer to brands. Of course, the consumers don't seem to be complaining. Mobile video ads are now the most engaging advertising format, with click-through rates or CTR as high as 2.5 times higher in comparison to other formats. So what does the future hold for mobile advertising in India, and what does this mean for ad tech platforms as they work with brands to ensure conversions as COVID changes the rules of the game? Well, to grapple with this new normal, joining me on Young Turks is India's longest-running show on startups and entrepreneurship. I have with me to talk about the future of mobile advertising and the impact of the pandemic on business, Naveen Tiwari, the founder and CEO of InMobi Group. Naveen, many thanks for joining us here on Young Turks. I believe you haven't stepped out of your home since March, but business certainly doesn't seem to be doing badly.
Well, thank you for inviting me on this show. This is one of my most favorite shows, Shireen, and congratulations on what you've done with the show in the last many, many years. You're right. Businesses which are, privileged as ours because we are, very digital business or completely digital business allows us the luxury of not stepping out. So yes, I have not stepped out now for close to 3 months and trying to stay safe, and not just myself, but everybody in the company is trying to stay safe. But yes, the business continues to grow. It is an unfortunate set of times, but a time which has essentially increased the penetration of any digital property, any digital asset that exists out there, and the consumption of those. And therefore, from our perspective in our advertising business, those verticals have gone through the roof in the last 2 to 3 months. So that certainly we're seeing a huge uptake in the business. And are enjoying the time that we are seeing out there.
Okay, that's good to hear. And I would imagine that, as I pointed out, people locked in and on their mobile phones pretty much through the course of the day. So, Naveen, pre-lockdown and post-lockdown, is business activity now back to the same level?
Yeah, so when COVID hit sometime in mid-March, we saw a decline in activity across the globe, across, I would say, majority of the sectors for end of March till probably end of April. What we started to see in the last, I would say, 4 to 5 weeks is an uptake on largely digital sectors in a big way, because those seems to have come back quite strongly. Having said that, those sectors actually never really went down that much. But every enterprise in the world was in a state of shock, and therefore everyone was holding back to realize what they really want to do, how should they assess the environment out there. And so therefore we saw some of that happen, hit the business at those times. But between, I would say, mid-March to where we are today, I think the business is back to the same levels. Albeit it is not in the sectoral the composition of the business is actually quite different.
I want to pick on that piece a little bit more. If you can give me some granularity as far as the sectors that are in focus, as well as the spending, because if I take a look at your top advertiser categories by spends, news is right up there, followed by shopping, business, entertainment, and finance. So what about the quantum of spends as well?
Right. So it is interesting to see that some of these sectors which pre-COVID used to index much lower are actually indexing quite higher, not just at the index level, but also at the absolute level. So the way I would look at this and what's really happening is that a lot of those companies are using this as an opportunity to realize that their businesses could be much larger than what they were expected to be pre-COVID. So gaming, for example, it's a sector which has just gone through the roof. Gaming, I would argue that over the last 2 to 3 months, gaming is has grown literally 3 to 5x, if not more.
Wow.
In general, that's the uptake that we've seen. Similarly, sectors which are more in the commerce space post some of the lockdowns opening up are really starting to scale right now quite heavily, because they obviously missed a huge amount of 6 weeks of business, but also people are expected to stay in. So it's a very obvious one, frankly, if you would ask me, that commerce would start to pick up and e-commerce would start to pick up a lot more. The ones that I thought were very interesting to see, which had not seen earlier, were more around health tech, for example, right?
Okay.
So there's a lot of health oriented things which are now happening. Health and wellness, I would put all of that in a similar bucket. But across both of these sectors, I say we are starting to see things which are happening because people are starting to understand and take care of their health while sitting at home, wellness while sitting at home. And therefore, these applications and these businesses didn't necessarily have that level of traction before this, and therefore, but these are now very they're very in, and so therefore they're spending quite heavily. And the other one, which is very, very visible across across the board, is our education companies.
Yeah.
And they were very lower on the index portion, except for maybe one or two companies out there. But right now you'll see a large number of them coming back out here and looking at this. And entertainment is a pretty obvious one, given people are at home logged in. Entertainment is a big sector that's really looking at things differently, and OTT applications, etc., are spending a lot of money to make sure that consumers come and log into their into those environments and consume as much entertainment content as they can. And so all of these sectors, I would argue, have seen a huge uptake. And not necessarily they were the top top of the chart. So the charts have changed.
Yeah.
The leaderboard has changed, but the size of the leaderboard is still very similar to the size of the leaderboard that existed before this.
The charts have clearly changed, and gaming, absolutely. Gaming, health and wellness, ed tech, e-commerce, these clearly have been leaders through this period. But in terms of the quantum of spending, Naveen, and everyone is dealing with cost implications, with cost constraints, rationalizing budgets. What is that going to mean in terms of spends going forward? What are you picking up?
So there are two ways one has to think about this. One is there is overall spending of advertising dollars, and then you have to see, while the overall spending of the advertising dollars have come down, what's the shift that's happened in the digital space. So if you take the overall pie has come down, but the digital nature of the pie has actually gone up quite a lot. Like, for example, I would be surprised if there are people who are still doing out of home out of home advertising.
Yeah, well,
right?
there's nobody. If people are locked down, there's no point in doing out of home advertising, is there?
Exactly, right. So that's one example which an industry should literally be at zero. But those dollars may not completely come back, but a portion of it would add to the digital pie. Similarly, because one of the big areas of advertising on television was live programs, and given any kind of sport is basically off the table for the next foreseeable future, a lot of that spending went down on television, but came back in the digital space. So, if you take these big buckets of dollars at the overall level, the dollars come down, but the digital pie has actually gone up. But as I said, the companies whose business models are digital first business models, they are the ones who are actually coming out. And by the way, anecdotally, I know that those companies are getting very strong ROIs from their businesses, because this is the exact time, there's always an opportunity in between a crisis and in this crisis, but there's huge opportunity for a lot of these companies, including ours, by the way. For example, even for us in the advertising space, there, such a massive shift from offline to digital would not have happened naturally. These very different times essentially lead to this kind of a shift that makes the businesses move differently. And so we ourselves had to kind of go back to the drawing board and look at what kind of products we need to make, what kind of programs we need to create in order to cater to a very different clientele, whose requirements are slightly different from the requirements of the clientele that was, our primary sector before this.
So let me then address that last point that you raised, Naveen. What is it that you're going to be focusing on, given the opportunities that you see in the marketplace? What are you gearing up for in terms of products, etc.? And, you've got what, there's within the group about 3 different verticals that you're dealing with at this point in time. What's your own sense in terms of being able to keep people? There is a fair degree of pain across various companies, and of course the startup ecosystem is not immune to that as well. So how are you coping with this?
We kind of thought through this as soon as kind of COVID hit. And there are 3 ways in which we kind of looked at what we should do in terms of contribution towards these times. One is, we obviously thought about what, as a business, and we are a fairly large company, what we should do to try and service to our society. And in that place, for example, we leveraged Glance, which is now one of the largest, consumer properties out there in India, touching close to about 100 million daily active users. We have now, for the last 60 to 75 days, we have every day sent information messages around safety, around things that one needs to take care of, alert messages to consumers, and close to 100 million of those people are consuming that content on a daily basis, and hopefully gaining from it. We ran programs around the Prime Minister's donation program, and we drove a lot of people and generated a lot of funds for them.
Yeah.
And so, we kind of used a lot of the assets that we have to essentially create these kind of things. And similarly, across the globe, by the way, we used our consumer intelligence platform, which is called True Factor. We used that platform to essentially provide, research firms, institutions, governments, intelligence pro bono, in order to essentially help them predict what the coronavirus, where could it hit more, what actions do they need to take. Because a lot of these problems, if you're actually not out on the road, the only way you can solve for them is through building, very rapid artificial intelligence models to essentially predict what could happen. So institutions across the world have had access to our intelligence and are leveraging that to essentially come up with hopefully better solutions and saving lives. And so we feel we are doing our bit, not just in India, across the globe, in our contribution to try and make sure that society is safer, and we do our bit on that front, at least.
So no rescaling of operations, whether in India or in the 7 countries that you operate in, as far as in Mobi for the marketing side of the business is concerned, no restructuring of any kind at this point in time?
The restructuring was only to essentially focus from one area to the other area in the large parts. We refocused our business to say, look, the certain sectors are not the ones, so we will change and go and deploy most of our resources in other areas. We did take voluntary, a reduction in compensation. Management took much harder cuts on compensation. Founders basically went down to 0. But we replaced that, whatever compensation reduction we did, replaced that with equity-centric compensation that we gave to people. And the idea was very simple, to say, look, these are times where we need to think long-term and not short-term about our enterprise, what value we are creating. And so therefore, we should, instead of trying to, cut down the cost by getting rid of people, we should all distribute the pain amongst all of ourselves, so that we can save as many people and not actually have to, not have the business take hit. Now, and these decisions were made, just at the beginning of when coronavirus was hitting.
Right.
And it was very hard to essentially know where the world would be. Even today, it's very hard, but we still have some more semblance of what the world would look like. So therefore, our policy, our criteria was very simple, is to say, we will go deep and hopefully it'll be temporary. But if we didn't do that, then you might have had to make certain decisions that would have to be, more permanent. But I think collectively as a company, and I pay them a lot of regard for the way maturely everyone in the company essentially took these decisions to effectively take the pain somewhat across the board, so as to safeguard the pain of few, which could have been, more brutal.
Well, that is, of course, part of good leadership. Naveen, always a pleasure. Many thanks for joining us here on Young Turks to take us through what life is like at InMobi at this point in time, how you're coping with the COVID times, and what the outlook is for mobile advertising as we move forward. Always a pleasure. Wish you the very best of luck. We'll take a break, but don't go anywhere, because when we return, the government has cleared key agricultural reforms, freeing farmers from mandis. After the break, we analyze the opportunity of India's agri reform with the founders of agri-tech platforms Ninja Cart and Cropin. That's coming up. While clearing the way for significant reforms in the agriculture sector, the government has cleared 3 key reforms announced under the Atmanirbhar Bharat economic package. The first one is the amendment to the Essential Commodities Act, deregulating commodities like cereals, pulses, oilseeds, edible oils, onions and potatoes. The second is the nod to the Farming Produce Trade Ordinance. This will pave the way for farmers to be able to sell produce anywhere across India. The cabinet has also cleared the Farmers' Agreement on Price Assurance Ordinance. This law will allow them to engage with processors, aggregators, large retailers and exporters. We also spoke with the Agriculture Secretary Sanjay Agarwal to understand how this is going to work. Take a look.
Right now, farmers is bound to take the produce to a particular place, and in this place, he is bound to sell it to only a person who is a licensee. So what the ordinance says, pan-India whole country, minus this physical markets, the 4 markets I talked about, that is defined as a trade area. Right now, no trade of marketable surplus for the scheduled commodities allowed in this trade area. This ordinance says any person who has a PAN card can buy the goods from the farmer, and farmer can obviously sell the market surplus to them. So this is an ecosystem which is created there. Second ecosystem which is part of this ordinance is very important. It basically enables a creation of an electronic platform which are delivery oriented in the country for agriculture produce.
So the idea is to free India's agricultural markets from the limitations imposed by permits and mandis that were originally designed for an era of scarcity. This move now provides more choices to farmers to trade their produce. So what comes next, and what is needed to ensure that platforms are able to leverage this opportunity? Joining me now are Thiru Kumar Nagarajan, the co-founder and CEO at Ninja Cart, and Krishna Kumar, the founder and CEO of Cropin. Thanks very much, gentlemen, for joining me on the program. Thiru, let me ask you about what this actually means. The government has put forward 2 separate ordinances. Once they're given the presidential assent and they are executed, perhaps will take some time before the states start to activate their machinery as well. But on ground, given your experience, how significant could this be?
Actually, speaking right, Ninja Cart deals particularly with vegetables and fruits, and vegetables and fruits previously is actually APMC rule is actually a state subject.
Yeah.
So we need to really figure out how the states are going to take the instruction from the central and going to change or amend their APMC Act.
Correct.
So that is something we have to wait and watch. But previously, also different states are highly advanced. For example, the place where we started, primarily Karnataka, they are actually very pioneers in APMC regulation. They opened up the market, so they give something called as the marketing license, agri-marketing license.
Right.
For example, Ninja Cart has agri-marketing license in all the states, and it's also relatively easy to get these licenses. So it's like buying from farmers by organizations where already there. It's just that a little barrier which used to be that licensing thing is actually removed, and the licensing is also not a difficult thing. It has been eased in most of the states. But for the point that remains is still right. You remove this barrier, but how are you going to enable companies to reach out to these farmers? That is primarily is going to be the key thing, right? Let's say still the farmer, right? You enable the farmer to sell it to anyone, but still, how is this channel is going to form?
Yeah.
Right? How private players who wants to buy from farmers can move and do it. The biggest problem here is most of our farmers are marginal farmers.
Exactly.
Though the farmers could be enabled to sell it to a company, but this farmer has very small produce, and at a company level, you have to deal with small farmers. It needs a very big tech platform to really do it. So let's say when we came in, we realized that, and that is one of the key challenges we are solving, right? How do you connect the marginal farmer with the buyer? That is still going to be a challenge, because one big company who wants to buy 1,000 tons, let's say of let's say tomatoes, right, cannot deal with 1,000 farmers to let's say 10,000 farmers to get his produce.
Right.
So the point is, enabling the purchase is the first step. That's a good. That the intentions are good, but how are you going to enable the trade is also going to be crucial.
You're very right about that. In fact, let me place before you, Thiru, the concern that was raised by Avik Saha, who is part of a farmers' organization. And he said, how will you ensure that the farmer gets the price that he deserves? Because as you're absolutely right, farmers in India have small land holdings, are marginal farmers. What is the mechanism that will ensure that the farmer is able to best negotiate with the buyer?
The basic problem with vegetables and fruits is, the farmers initially doesn't know the demand of a market. So the farmer takes the item to a market, and then he figures out the demand is in the market is less. Because of that, the price he's going to get is low. He cannot take the item back to another market, because the item has already reached, and if you takes it to another market, it will be one more day old, and he will not even get the value of it, right? So the biggest thing which we need to solve as a nation is, how do you match the supply and the demand, and then bring all the supply and demand into a common platform for a negotiation. That is going to be one crucial factor. The second crucial factor is, even if you do that, let's say you bring the supply and the demand into a common platform where people can have a transparency in terms of that, grading or defining the quality, there has to be someone who's going to define. Let's say, for example, I come to the platform and I buy a tomato from the farmer at 100 rupees, right? But then when the item reaches me, if I feel the quality is like very bad, right? Then I feel like a loser and I will leave the platform.
Correct.
So then I'll go to the offline place or the normal way of working.
Correct.
So what we need to ensure as we create the ecosystem is, who's the guy who's going to define the quality, so that the buyer is going to trust and place his trade there.
Correct.
Because a different quality will have different prices. That is the beauty of this agricultural produce, right? It's not a manufactured thing where every quality is standardized, right? So I feel creating the platform where you create the transparency between the buyer and the seller, and at the same time also bringing in the quality assurance, which is going to be critical for agricultural produce. Actually, that is going to be the game changer.
That's a very valid point that you make. The quality assurance aspect, perhaps not very often spoken of, but it is going to be critical, especially as far as the agriculture sector is concerned. Krishna, let me ask you, what do you make of what has been announced? Where do you seek more clarity? Because to the point that Thiru was making, a lot of states have already liberalized the agri activities to a large extent. So what clarity would you require, and how do you see this moving forward?
Yeah, so when I look at these reforms, these are some of the welcome moves, because the country has been waiting for a very, very long time. And if we combine, I mean, Thiru was raising a very valid question: who controls the quality? Because somebody wants to buy from a smallholder farmer, he don't want to deal with that one farmer. One and one. Now, if you look at some other push which government is trying to bring, is a FPO and FPC, where they are forming a thousand group farmers and running like a private limited companies. And I think today we have got more than 500 FPOs running in the country. If we combine all these reforms along with this FPO kind of a structure, and then Essential Good Commodity Act, I think the reconfiguration of supply chain will happen. So now the negotiating power of an MPO will increase, not only from the selling perspective, but also from the input perspective. They can reduce their cost because they can now demand in volume. Correct. So I think what I'll be looking forward from the government, that how they connect all these dots. We are talking about the contract farming reforms that bringing with the legal framework. That is also very, very welcome move. But then they have to connect all these dots together and bring it as a platform. And then we will see this shortened supply chain, better quality, and improving the income and livelihood of the farmers as well. So that's where I see I'll be seeking more clarity from the government how these things are getting executed.
Yes,
I mean,
we are seeking clarity as well, and we're seeking details of both those ordinances which are not available publicly at this point in time. So we don't know what the minutiae of the ordinances entail. But coming back to the two of you, and Thiru, let me start by asking you. You know, you talked about how many states have actually moved quite aggressively to liberalize and open up even the agriculture sector. What is the crucial pain point that you continue to face that you believe now hopefully will be addressed through these measures as and when they're executed?
See, the crucial pain point, right? The government is placing an enormous amount of focus on developing FPOs, and they believe that FPOs is going to be the game changers. And let's say all subsidies, or let's say anything the government wants to execute, are planning to be executed through FPOs. But my experience, or our experience with FPOs, are actually the worst, because FPO acts as another middleman, and you see most of the FPOs we see are actually corrupt. They make a lot of money in between, again, the farmer and the buyer, and they also get a good amount of money out of it, right? So, like, if the government is going to put that much of trust on FPOs and believe that FPOs are the way for us to improve or make sure the farmer gets better value for his produce, I think we need to also put in mechanisms in place. How are you going to make sure the FPOs are functioning for the benefit of the farmers?
Correct.
That's going to be crucial, and that actually also creates a kind of ecosystem where the farmers are forced to do whatever the FPO says, and the FPOs are getting more and more powerful.
Correct.
I'm not saying all FPOs are bad, but this is something which you're seeing on the ground, and actually it's right time for the government to focus on let's say, if my direction is that I have chosen FPO as a way to make sure everything reaches to the farmers, how am I going to make sure that these FPOs are having a proper governance in place?
Sure. That's an important point that you've raised. One of the safeguards that needs to be put in place, Krishna, to the point that was being made there by Thiru on FPOs and ensuring that FPOs don't replace the middleman, so to speak. What has been your experience in terms of the crucial pain points that require redressal?
Yeah, so I think, we have a similar experience working with the FPOs. So we are working with some of the FPOs of Rabobank or Commonality. And, I saw an approach of giving a 360-degree solution to these FPOs. So, there's a lender who is trying to finance that FPO because they are getting into a production of certain crops. And the lender is saying that, I will only get back the money when there is a market linkage to this produce. And I have seen that they're also helping those FPOs to sell the produce so that their money can come back. They're financing the input. I think, FPO alone will not be a solution, but the framework around it and creating a input, output, and the capital, working capital requirement linkage together will make these FPO more successful. And also government need to also, create a realization in the smallholder farmer that there's a benefit in becoming the part of the FPO. I've seen a lot of FPO get created on paper, and there are 1,000 farmers nominated for that, and they participated into it. They have equity holding, but then after that, that dispersed because they don't see the value. Because at the end of the day, they're selling their input into the same mandi and realizing the same price.
Yeah.
They're not getting any value in terms of reducing their cost when they're buying inputs and other kind of support they're looking for, right? So I think it has to be a very, very organized effort, and government just can't give 30 lakh rupees to create an FPO to some NGO.
Yeah.
They need to tag that 30 lakh rupees to some kind of incentive that after 3 years, the FPO has to be self-sustainable,
right,
or there is a penalty on top of it, right?
Yes.
But this is like a free money.
Yeah.
So I have seen many of the good FPOs also coming up, and they got the loan, the working capital from the bank on their own capabilities. But there are also examples of some FPOs which is just on pen and paper.
Sure.
So I think that's where we have to look into it. Yeah.
Well, Thiru and Krishna, thanks very much for joining us today with the initial take on what these reforms could mean for the agriculture sector. As I said, we don't have enough information. We don't have the fine print, the minutiae, but we'll get the two of you back when those ordinances are made public, and we do have those details to understand the real impact of the measures announced by the government. Hopefully, we will see forward movement. Thanks very much for joining us here on Young Turks. We'll take a break. There's a lot more coming up. Don't go anywhere.